Hi everyone. I hope everyone is fine. Welcome to our channel. If this is the first time you come to our channel, please watch our previous videos, then you will understand this topic well. I will leave those videos and playlist links in cards. Okay, without wasting our time, let's get into the topic. Here is the topic. Welcome to Hope Pips, your go-to channel for mastering Forex trading strategies. I'm your Hope Pips, bringing you proven techniques to navigate the markets with confidence. Today we are diving into the powerful drop-based drop strategy, a favorite among traders for spotting bearish setups in Forex. This strategy is all about identifying price action patterns that signal a strong downtrend, helping you enter trades with precision. In this video, we'll break it down into three chapters. First, we'll explain what the drop-based drop setup is with a clear bearish example. Then we'll zoom into the micro details using multi-timeframe analysis across daily, 1 hour and 15-minute charts with two bearish examples. Finally, we'll walk through three practical sell trade examples. Whether you're a beginner or a seasoned trader, this video will equip you with actionable insights to trade smarter. So grab your notepad, hit that like button, and subscribe to Hope Pips for more trading wisdom. Let's jump into Chapter 1. Chapter 1, Drop-Based Drop. Chapter 1, Understanding the Drop-Based Drop Setup. The drop-based drop, or DBD, is a price action pattern used in Forex trading to identify bearish continuation setups. It's a three-phase structure: a sharp drop in price, a base where price consolidates, and another drop confirming the downtrend. This pattern reflects strong selling pressure, often seen in supply zones where sellers overpower buyers. Here's how it works. The first drop is a rapid decline in price, showing sellers taking control. This could be triggered by a news event, rejection from a resistance level, or heavy selling volume. Next, the base forms as price pauses, creating a consolidation zone. This is typically a tight range with smaller candles, indicating a temporary balance between buyers and sellers. Finally, the second drop occurs when sellers reassert dominance, breaking below the base to continue the downtrend. Let's look at a bearish example on the GBP-USD pair. Imagine price is trading at a key zones on a 1-hour chart. It drops sharply to here, forming the first drop. That's like a 50 pips of selling pressure. Then price consolidates between these key zones for a few hours, forming a base with tight, sideways candles. This base signals indecision, but it's also a supply zone where sellers are likely reloading. Finally, price breaks below this supply zone, dropping to here, confirming the second drop. To trade this, you'd wait for the breakout below the base, setting your entry at, say, here, with a stop loss above the base at confirmation candle high. Your target could be next support zone, aiming for a 2-1 reward to risk ratio. The key is patience. Wait for the base to form and the breakout to confirm the setup. TBD works because it captures the market's momentum and seller conviction. It's most effective in trending markets or near key resistance levels. In our example, the GBP-USD might have hit a daily resistance, triggering the first drop with the base forming as buyers try to defend but fail. That's the drop-based drop setup in a nutshell. Next, we'll dive deeper into its micro details with multi-time frame analysis. Chapter 2, Micro Details of DB. Chapter 2, Micro Details of Drop-Based Drop with Multi-Time Frame Analysis. To master the drop-based drop strategy, you need to analyze it across multiple time frames, daily, 1 hour, and 15-minute charts. This approach confirms the setup strength and aligns your trades with the broader market context. Let's break it down and explore two bearish examples. Multi-time frame analysis explained. On the daily chart, you identify the macro trend and key levels. Look for a bearish trend or a strong resistance zone where the DBD might form. The daily chart sets the stage, showing if sellers are dominant. On the 1-hour chart, you spot the DBD pattern itself, the first drop, base, and second drop. This time frame helps time your entry. The 15-minute chart refines your entry, pinpointing precise breakouts or candle patterns within the base. Let's see one bearish example, EUSD on multi-time frames. On the daily chart, EUR-USD is in a downtrend, rejecting a resistance at here. Price drops up to here, forming the first drop. A base forms between these two zones, visible as a consolidation zone. On the 1-hour chart, this base tightens with candles forming a rectangle pattern over 6-8 hours. You notice selling volume increasing, hinting at a breakout. On the 15-minute chart, a bearish engulfing candle forms at here, signaling the second drop. You enter a sell trade at 1.0955 after the breakout, with a stop loss above the confirmation candle and a target at here. The daily chart's bearish trend supports the trade, the 1-hour chart confirms the DBD, and the 15-minute chart provides the precise entry. The trade hits the target, yielding a 2.51 reward to risk ratio. Let's see another bearish example, USD JPY with supply zone. On the daily chart, USD JPY approaches a major supply zone at here, where price previously reversed. A sharp drop up to here forms the first drop. On the 1-hour chart, a base forms between these key zones, lasting 10 hours with small candles. On the 15-minute chart, a shooting star candle at here signals seller strength. Price breaks below this zone, confirming the second drop. You sell at here, with a stop loss at the above confirmation candle and a target at here. The daily resistance, 1-hour base breakout, and 15-minute candle pattern align perfectly, and the trade hits the target. Key takeaways. Multi-time frame analysis ensures you trade with the trend, confirm the DBD pattern, and refine entries. Always check the daily chart for context. Use the 1-hour chart to identify the DBD and leverage the 15-minute chart for precision. This layered approach minimizes false signals and boosts profitability. Let's move to practical examples in Chapter 3. Chapter 3. Examples 3 bearish DBD examples. Now let's apply the drop-based drop strategy to 3 sell trade setups. These examples show how DBD integrates with other patterns for high probability trades. Example 1. Sell trade with shoulder pattern, nothing but head and shoulders. On the GBP USD 1-hour chart, price forms a head and shoulders pattern near a daily resistance at 1.3100. The right shoulder forms the first drop, falling from 1.310 to 1.3050. A base develops between 1.3050 and 1.3065, visible as a consolidation zone over 8 hours. On the 15-minute chart, a bearish pin bar at 1.3060 signals the second drop. You enter a sell trade at 1.3050 after the base breaks, with a stop loss at 1.3075 and a target at 1.3000. The head and shoulders pattern, combined with the DBD, confirms strong selling pressure. The trade hits the target, delivering a 2:1 reward to risk ratio. Example 2. Sell trade with triangle pattern. On the USD CAD 1-hour chart, price forms a descending triangle near a daily supply zone at 1.3700. A bearish breakout candle below 1.3650 confirms the second drop. You sell at 1.3645 with a stop loss at 1.3670 and a target at 1.3595. The triangle's bearish bias aligned with the DBD ensures a high probability setup. The trade succeeds, hitting the target. Example 3, Sell breakout entry. On the 15-minute chart, a strong bearish candle breaks below this support zone, confirming the breakout. You enter a sell here with a stop loss the confirmation candle and a target at next support zone. The breakout's momentum, backed by the DBD structure, drives the trade to the target. These examples show how DBD combines with patterns like head and shoulders, triangles, and breakouts for robust sell trades. Practice identifying these setups on demo accounts to build confidence. That's a wrap on the drop-based drop strategy. Hope Pips traders. We've covered the DBD setup, its micro details with multi-time frame analysis, and 3 practical sell trade examples. This strategy is a game changer for spotting bearish opportunities, but it requires patience and discipline. Start by backtesting on pairs like GBP/USD or USD CAD, and always use proper risk management. Never risk more than 1-2% per trade. If you found this video helpful, smash that like button and share it with your trading buddies. Subscribe to Hope Pips and hit the bell icon so you never miss a strategy breakdown. Drop your questions or favorite DBD setups in the comments below. I read everyone. For more Forex tips and exclusive content, check out our channel playlist or join our community at. Until next time, trade smart, stay disciplined, and keep chasing those pips.